Hey, good morning, everybody. Today is Tuesday, June 21st, 2016, the first day of summer. My name is Cliff Backus, and this is your pushbuttonstocktrading.com daily video market review. Let's get started this morning with our Spectrum Analyzer. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 5 came from the managed care industry, 5 came from precious metal mining, 4 came from the commercial and residential building equipment and systems industry, 4 came from application software, and rounding out the top 5, we had 4 steel producers. Pretty evenly balanced spectrum analyzer this morning. We really have not been seeing a lot of any of these industry groups, with the possible exception of precious metal mining. We've seen a little bit of managed care, we've seen a little bit of commercial and residential buildings equipment, we've seen a little bit of application software, and we've seen a little bit of steel producers. These may be good places to look for leadership in this market. Let's begin today by taking a look at the Russell 2000. As you know, I've been saying the Russell 2000 is the key to the market going forward. One of the reasons that I say that is, if you notice, we had minor resistance here in the 1156 area, which we took out back here in the beginning of June. The Russell has been able to easily better this resistance area. When we take a look at the S&P 500 and the NASDAQ, you'll see that they have struggled much more with their late April, early May resistance. Yesterday, the Russell tried to recapture this area in the 1156 range and seems to have blocked there. We'll see if we can put this level behind us. But for right now, the Russell looks very healthy here. We held support at the 50-day moving average, which we show here in red. We held support at the 1140 area, which is exactly where you would expect to see the Russell hold support. And yesterday, the Russell was up 1.14%. Significantly better than either the S&P 500 or the NASDAQ composite. Speaking of the NASDAQ composite, let's take a look at that. But before we do that, stocks closed mostly higher, but at their lows for the day Monday as markets around the world pushed sharply higher. Trading volume was light. All in all, it was a disappointing day for the bulls, who would have preferred to see the indexes close higher in their daily trading ranges and on heavier trading volume. Our distribution count held at 3 days on the NASDAQ and 2 on the S&P 500. Investors.com has a slightly higher distribution count, with the NASDAQ showing 4 distribution days and the S&P 500 indicating 5 days. Why the difference? The older distribution, or selling by professional managers, becomes less relevant. We stop counting distribution when it's about a month old. Investors.com doesn't purge distribution from its count until it's 5 weeks old. In addition, Investors.com counts stalling days. A stalling day is a form of distribution that requires that the index close higher, but at the bottom of its daily trading range, on heavier trading volume. Unless it's egregious, we don't track stalling days. All that noted, Investors.com has lowered its outlook on the market to an uptrend under pressure. Our market timing model is clinging to a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. Yesterday in my note to subscribers, we indicated that the NASDAQ had gone to a sell signal. Technically, the NASDAQ should remain on that sell signal until it meets the criteria to change. But because of the market activity yesterday, I've overridden our sell signal and maintained a buy signal until the NASDAQ again meets the criteria for a sell. Both the S&P and the NASDAQ recaptured support levels at key moving averages yesterday. The S&P recaptured its 50-day moving average, the NASDAQ its 200. Monday, advancing issues topped decliners by about 10-3. New highs continued to better new lows. According to our Ramosi ratio, large capitalization stocks bettered small, but small continued to outperform on a 10-day moving average basis. Bulls prefer to see small caps outperform. The short-term McClellan oscillator remains bearish, but if the market closes higher today, we'll most likely turn to a short-term bullish signal again tomorrow, as should our new high, new low indicator and the Wells Wilder directional movement indicator, or DMI, as well. Our Ramosi swing timing model is back to indicating a neutral condition in the market. From a market perspective, both the S&P and the NASDAQ have recaptured support at key moving averages. Our market timing model is on a buy signal. While our distribution count is less of a concern, we're seeing signs of strain in the market. From the bulls' perspective, it's important that we hold our mid-May support. For the NASDAQ, that's in the 46.78 area. For the S&P, 20.44. We'll see if we can hold these key levels. In the meantime, traders should be cautious and should keep their stops in place and current. Okay, yesterday the NASDAQ Composite closed up 36.87 points, or 0.77%, considerably less than the 1.17% that the Russell closed higher. We closed at 48.37, and notice how the NASDAQ closed at the very bottom of its daily trading range. That's a little bit of a concern for the bulls. We also closed underneath the 50-day moving average. We found resistance there. We show the 50-day moving average here in red, but we did recapture our 200-day moving average. And so that kind of gives us a neutral indication. We're back to being bracketed by the 50-day moving average and the 200-day moving average on a short-term basis. Trading volume yesterday was about average, considerably below Friday's triple witching volume, but you would expect that. For you followers of William O'Neill, we are in an uptrend under pressure. We've been in an uptrend since February, and we have only 3 distribution days on the NASDAQ in the past month. That's not a lot of distribution. Right now, the NASDAQ appears to be bracketed by support down here in the 46.78 area. That's key support. If we were to break below that level, that would be a very bearish indication on the market. And we have resistance up here in the 49.69 range. Our market timing model on the NASDAQ, as we noted, is holding on a buy signal. Note how on Friday we closed below this 1% envelope around the 21-day exponential moving average. The 21-day exponential moving average was lower than it was 2 days prior, and the 10-day simple moving average, which we show in green, was lower than it was the prior day. That's our definition of a sell signal. Technically, in order for the NASDAQ to go to a buy signal, we would have to trade above this 1% envelope. The 10-day simple moving average and the 21-day exponential moving average would both have to be trending higher. That's going to be a little bit difficult to do over the short term, and so I've overridden the sell signal on the NASDAQ, and we're going to call it a buy signal at least until we get another sell signal. Let's see what the S&P 500 is up to. S&P yesterday was up 12.03 points, or 0.58%, exactly half of what the Russell 2000 was up. We closed at 2083. Notice how the S&P 500 recaptured its 50-day moving average, which we show here in red. That's a bullish sign. We closed in the bottom half of our daily trading range, but not really at the bottom of the daily range, which is a less bearish indication than perhaps we saw on the NASDAQ. Yesterday, trading volume was a little bit below average, and again, considerably below the triple witching volume of Friday. The S&P 500 is in a uptrend under pressure. We've been in an uptrend since February 18th. We've only 2 distribution days on the S&P, and so distribution isn't really a cause for concern at this point. S&P remains on a buy signal, never even came close to giving us a sell signal, and remains bracketed by support down here in the 2044 area and resistance up here in the 2116 range. But note that the S&P really has struggled with psychological resistance around the 2100 area. We'll see if we can take that area out in coming days. Before we go, I want to talk about Mobileye. Mobileye NV is an Israeli-based developer of software and related technologies for camera-based advanced driver assistance systems. We've been watching Mobileye as it's climbed from its recent lows well over 30%, and then has put in this nice double bottom base with a pivot point up here in the 3990 area. Mobileye gets a 68% checklist rating. We broke out yesterday on very heavy volume. We've been seeing a little bit of accumulation volume in Mobileye recently. Mobileye should be of interest to both conservative and aggressive traders on this breakout. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call. Drop me an email or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs Incorporated believes to be accurate. Ohanneson Liqueurs Incorporated makes no representation that such analysis or calculations are accurate, or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.